It was the highest bidded bond auction in recent years. The August 2025 bond issue, reopening to infrastructure bonds, that is the IFB ones 2018-15 and 2022-19, attracted bids of 323.43141 billion against a target of 90 billion. That translates to a performance of 359.37%, leaving us with an oversubscription of 259.37%. According to the auction results, the CBK accepted bids amounting to 95.0136 billion, that is some 5 billion above the target of 90 billion, and that means that bids in excess of 228 billion was rejected. That was a massive rejection of bids. The shorter bond, that is IFB 1 2018-15, with a redemption structure that delivered a shorter investment period of 2.5 years, attracted a massive subscription, meaning that majority of the bidders who are non-competitive bidders were looking to invest in the short-term investment period delivered through the redemption structure of that bond, and that attracted in excess of 215 billion worth of bids, and a lot of those bids were rejected, amounting to 165 billion, because only 50.858388 billion was accepted for that particular bid. Infrastructure bonds have attracted a huge demand from the investing public because of the fact that they are issued free of tax, and that through their redemption structure or the partial redemption of the amounts invested, these bonds give shorter investment periods, and that is the reason why this auction attracted that massive bidding and also massive rejection of bids. We shall be looking at the details of the results of this auction by looking at the bid outcomes and the auction results after 3 seconds short break. So don't go away. In the meantime, as always, give us a like to this video, engage us in the comment section, and if the video has value, share it to another person. See you after 3 seconds short break. Welcome back to our continued review of the bond auction results of the August 2025 bond auction. The auction had two infrastructure bonds reopened, that is the IFB 1 2018-15 and IFB 1 2022-19. And as per this schedule of the bid outcomes, the first bond, the shorter bond, that is IFB 1 2018-15, with a coupon of 12.5%. The coupon is also what we call the bond yield. That is very important because it is the bond yield that we compare with the market yield in our next schedule to give us the discounted price or the premium price out of the auction. The IFB 1 2018-15 has a maturity or due date of 10th January 2033, and the total bids that were received for this particular bond amounted to 215.94168 billion Kenya shillings. So this bond alone giving us a medium term investment horizon of about 7.5 years, and through its redemption structure giving us a short investment period of 2.5 years, and that is in favor of many investors. That is the reason we had so many bids for these particular bonds. Out of the 215.94 billion, the bids accepted for this particular bond amounted to 50.65838 billion Kenya shillings. And that means then that the total rejected bids for this particular bond amount to 165.2833 billion Kenya shillings. The second bond, with a longer investment horizon of about 12 years, that is the IFB 1 2022 2019 with a coupon or bond yield of 12.9650% and a maturity date, a redemption date in 2041, 28th January. These bond attracted bids amounting to 107.48973 billion. And out of that, a total of 44.35522 billion was accepted, leaving out 63.13451 billion rejected bids for this particular bond. And that has given us a total of 228 billion worth of bids being rejected out of this auction, because as we had seen earlier, this is the highest bidded bond auction in recent years, with a 359.37% performance rate or subscription rate. That is an oversubscription of 259.37%. As per that bond bid outcome, the government had a target of 90 billion out of this auction and accepted a total of 95.0136 billion, and over 97% of this total was used for redemption purpose. What that means is that this auction targeted to repay or redeem maturing bond investment, because it is only the government that is allowed legally to borrow to pay maturing loans or debts. And that is one feature that makes bond investing a low risk investment. And in our next schedule, we are looking at the auction result. The market yield as at August 2025 was at 13.45%, and compared to the market yield in July 2025, which was at 13.5%, the market was stable during the 2 months, and it is the market yield that we compare with the bond yield. The bond yield is the bond coupon. If the market yield is higher than the bond yield, that is the key pointer towards a discounted price. If the market yield is lower than the bond yield, which is the bond coupon, that is an indicator of a premium, as either the government, which is the issuer, compensates the investors for that difference in market yield and the bond yield. And therefore, the two bonds, that is the IFB 1's 2018-15 and the IFB 1 2022-19, the market weighted average rate of all bids for the IFB 1 2018-15 stood at 13.5296%. That is the market weighted average rate for all competitive bids that were received on this particular bond. Then, out of rejections and in adherence to the investment policy for this particular auction, the market weighted average of accepted bids was driven down to 12.9934%. And therefore, now comparing that rate of accepted bids and the coupon of this bond, which is the bond yield, then the bond has a lower rate compared to the accepted rate of accepted bids. And what will happen is that the government will compensate the investor for that difference in yield by giving a discount on the price for the auction. And that is the reason why the clean price for this bond stands at 98.1918. The auction result paper gives you first the dirty price, but for our review, we have to look at how that price is derived. The dirty price has two components. That is the clean price, which is the price from the auction, and the accrued interest. The clean price is arrived at by comparing the market yield of accepted bids and the bond yield. And that is why we have picked the 12.9934, which is the market weighted average of accepted bids, and 12.5 being the coupon. The coupon is lower than what the investors demanded as a return and accepted in this auction, which is higher. And because the new investors in this bond are joining or are investing in the same terms as the existing investors, because this is a reopened paper, then they get compensated for that difference by getting a discounted price out of the auction. And that is what now we call the clean price. Because the bond, this is a bond that is paying its coupon in March and September. It has already accrued interest for that period to date. And the accrued interest is 0.9615 to every 100. That accrued interest has to be paid for or purchased by the new investors, as they will receive the total coupon out of these bonds just like the existing investors. And for that reason, then the accrued interest shall be added to the clean price of 98.1918 to give us the dirty price that you are having in that result paper of 99.1533. So this bond, IFB 1 2018-15, has been auctioned at a discount of 1.8082 for every 100. The second bond on issue was the IFB 1 2022-19, with a market weighted average rate of 14.2370%. The market weighted average of accepted bids for the IFB 1 2022-19 is at 13.9991, and compared to the bond yield for the IFB 1 2022-19, which is at 12.9650, also this coupon or the bond yield is lower than the market weighted average of accepted bids at 13.991, and therefore again this has to be compensated through a discounted price, and that's why we are getting a clean price of 94.5991, giving us a total discount for this particular bond of 5.4009 for every shilling. This bond did not have an accrued interest because the coupon payment date coincides with the settlement date for this auction, which is 18th of August 2025. And therefore, the clean price is also the dirty price of 94.5991. Those are the specific auction results for this particular issue. But before we close, we go back to the bid outcome and look at the IFB 1 2018-15. And considering its rejection of bids, I'm attracted by the distribution of the accepted bids, where majority of the accepted bids are from non-competitive bidders, because only 8 billion of the accepted bids of the IFB 1 2018-15 was from competitive bidders, and 42 billion came from non-competitive bidders, where such bidders, a majority are the DIY or individual investors. And the major factors that attracted investors toward this particular bond are not only the fact that infrastructure bonds are issued free of tax, but mainly because through the redemption structure, this bond gave us a very short investment period in the bond market of 2.5 years, with those investors who have invested an amount, face value of up to $1 million, getting a redemption of their full investment in January 2028. Then those who have invested more than the 1 million, 40% will be redeemed in 2.5 years, and the remainder of their investment shall be redeemed to term, which again is a medium investment term of about 7.5 years. Thank you for watching and see you in our next video.